Hey, welcome to this session of Free Tax Tips. In this session, we're going to talk about what you can take as a deduction for your rental property. Now, what is my rental property? Rental property is generally going to be any property that you rent out for income. So it could be a room in your house, it could be a back house, it could be a house that you no longer live in, it could be a duplex or a multi-family unit. What you can generally take as a deduction, the most common ones, are going to be, of course, advertising, travel to and from the property. So if it's out of state, that really comes in play. Or if it's out of town, you have to fly, get a hotel. Those things add up. Cleaning and gardening for the property. Insurance payments for hazard, liability insurance, earthquake insurance, what have you. Legal fees if you have to get someone evicted. That's definitely a deduction. If you're dealing with some type of ownership property interest, clearing title, those fees would be deductible. Property management, let's say you don't manage the property yourself, you pay for property management, that's going to be a deduction for you. Mortgage interest, can't forget that one, that's going to be probably the main one. So you have this rental income, you got to offset with expenses. Don't forget mortgage interest, that one is definitely one that comes into play a lot of times and is very helpful. Property taxes, which may sound familiar, especially if you watch the previous one. Mortgage interest and property taxes are also deductible on the personal side as well as on the rental property side. Then you have repairs and supplies and so forth. So if you do like minor repairs, plumbing, electrical, roof, those things are going to be deductible. Now here's something that the IRS often points out to us, is to be able to differentiate between repairs and improvements. Improvements, I'll give you a quick example. A repair would be a roof patch. So the roof has a leak, we send the repair guys up there, they patch the roof, that's a repair. An improvement would be, hey, this roof is pretty shot, it's leaking pretty bad, I'm going to replace the whole roof. That's an improvement, and now it's still deductible but differently. We have to amortize that over 27.5 years for a residential rental property instead of being able to take all of that at one time. See the difference? If it's a repair, we can take it all at one time. If it's an improvement, we have to spread it out over the life of the property. So those are two things as well. And remodels, improvements, things like that are usually spread out. Now, some properties may have HOA dues. So if you're renting out a condo, for instance, or a house that's in a gated community has HOA dues are deductible. Some clients that have rental properties have tenants mail the payments to like a P.O. box. That's going to be deductible. If you have a home office, for instance, and you have to do things like, write rental receipts and transact, business, you may have some office supplies. That comes up from time to time. A different phone line for tenants to call, that comes up. City fees and inspection reports, that comes up. Those are deductible as well. If you have an appraisal that has to be done for whatever reason, generally an appraisal may be a part of a refinance, but it could be a part of some maybe court dispute that you have, that would be a deduction. And don't forget utilities. Utilities, that's going to be water, trash, electric, gas, those things that you pay. Those are going to be deductible as well. So that covers probably about 15 to 20 different items that I brought up that are deductible rental expenses for you. Don't forget and don't overlook any one of those, but it's not limited to those. Those are just the most common ones. So if there are any other ones, if it's related to your rental property and it's ordinary necessary, you'll hear that often used in income tax, ordinary necessary, then take that. One more thing I don't want to forget to tell you to write off is your depreciation. That's kind of like a bonus there. I'm going to throw that in. It's depreciation. It's wear and tear on the property just because the property is getting older. You can claim that, and it's very helpful, especially in years 2 through years 27. First year, depends on when you buy it, it's more helpful or not. But from years 2 through 27, don't forget to claim that mortgage interest as well as that depreciation on the property. Hope that's been helpful for you. If you have found that helpful, definitely feel free to like us. You can also subscribe to our channel, and we'll catch you next time.